Rougefx. Today we will be going over market structure, right? How do we locate or identify these ranges that we're supposed to be putting our faith and our money and our finances for our families, putting so much faith in? How do we confirm these highs and these lows of these trading ranges? It's not going to be nothing too much. If you want to just give me a second, it's going to be a low, high, higher low, higher high, and then as well as another higher low. I'm pretty sure at some point in your trading journey you've come across this. I don't want to. I guess you can say price pattern, or I don't know. It just really just depends on your personal trading plan and how you choose to approach the markets on a daily basis. I've created this diagram to pretty much, or illustration to pretty much show you how are we going to confirm this highs, these lows that we are looking to execute off of. How do we confirm this lower high? How do we confirm this higher high? How do we confirm this lower high? How do we confirm it? How do we identify the right bias so we can trade on a consistent basis and at that profitably? So as soon as a higher high is broken or taken out, traded, however you want to say or call it, this will automatically confirm this low. So at this point, this higher low is more than likely protected. As we all know, or as you would have known if you watched my previous video, which you can check out, link in the bio, we trade in range cycles, right? And those range cycle is, or that range cycle is internal range liquidity to external range liquidity. And it's just a continuous cycle. So in this case, we are aiming for external range liquidity. And from here, we want to note that highs have been rated and it may be time to either start looking to short or maybe take partials, maybe take something off just to secure your daily profits and kind of chill out. It really just depends on what time frame you're in, whether you're in a monthly, you're a position holder, or you're in the 1 hour, you're a day trader, or 15 to like, it's really preference. I personally, for me at this point, I can literally it really just depends on my patience at the moment, or however, and it can obviously grow over time as well as your risk tolerance. Now, what I want to talk about is how do we confirm that this high will be protected, or not necessarily protected, but it will hold. This is the high that's going to create or give price a reason to come back down to internal range liquidity and obviously continue to the range cycle to external range liquidity and then vice versa. It's a never ending cycle. Now, pretty much what confirms this higher high, and again, I would just want to let you know this is why I kind of shaped it like this, is because price is not always going to look, it's not always going to look identifiable, if that makes sense. It's not always going to look the prettiest. It's not going to look, most of the time it's going to look the ugliest. And honestly, that's where the most skillful traders thrive in, because it just gives a plethora of opportunity to secure extra partials throughout the day. However, how do we confirm? How are we going to confirm this higher high to be the high that holds first and foremost and doesn't just take off? And two, it's tradable, right? Because we could obviously go on the lower time frame, say this is the 1 minute, and on the other hand, the overall range, right? The overall range before the continuation or expansion to higher prices. You could say this would probably be more of a 15 to 30-minute low. And that's why it gives you this schematic or price pattern that you can trade off of with smart money point of view, which if you, smash that like button and I will go over that as well. How do you see markets in expansion ranges that you can honestly catch thousands and hundreds and even scalp 50 pips and under? Like, I'm not even going to get into that. That really just depends on what kind of trader you are, your confidence, and how you decide to go about your trading approach. Back on topic, in order to confirm this higher high, you would need to wait for a break of structure, a choke, or however you want to call it, however you do call it, in your trading plan. Pretty much a liquidity grab, break of structure, a reversal, a resistance turn support, whatever you need to call it to get the concept I need or I'm trying to get across. You pretty much wait for your pattern, confirm your liquidity grab, confirm your break of structure, choke. With the expertise, with the knowledge, with the experience, you can scale in and continue to enter obviously again until equilibrium or fib level. Please go check out that first video where we talk about premium and discounted pricing. I urge you to do so and stay up to date with all our content, as we will definitely be dropping videos weekly, maybe even daily. It really just kind of depends on my schedule. So again, just to review, as soon as this higher high breaks structure, obviously provides a liquidity grab, and then breaks structure or change of character, however you want to call it, the markets will then decline and obviously reach for lower pricing, or at least discounted pricing, in order to obviously clear out internal range liquidity, which again I talked about way more in depth in the previous video. At this point, it's just about reacting to one, internal range liquidity, as well as the different POIs that I don't even want to say POIs. I'd say obstacles that are in the way to obviously. I mean, obviously the price can definitely keep going, and that's why. I mean, this is definitely a lifestyle. This is something that you should definitely take serious, and if you're going to participate in this industry, I urge you to take it serious. This is like, take this as if it is a real job, because it definitely is. So again, just to review, how do we confirm this low? How do we confirm any kind of low? We need to create a higher high. We need to break a major high. Sometimes not even a major high. It can definitely break an intermediate high. It really just depends on market conditions. Again, how do we confirm our higher high? We need and obviously this is going to be on a lower time frame. Again, 15-minute, right? This range is 15 minutes. This range in the lower time frame of 1 minute is going to be very much apparent. All you got to do is switch time frames. Again, top-down analysis. Leave a thumbs up, and I would definitely go over that as well. Confirm your liquidity grab. Confirm your break of structure or choke. That confirms your range. And then really, if you're really skillful, all it takes is scaling in, and it just becomes a work of art. And as soon as you see internal range liquidity or an inducement or a price pattern or demand zone, take your long. This is when it gets dangerous. This is when it gets actually crazy. You're aiming for external range liquidity, obviously your 15-minute high, but it's like, imagine if you had like a 4-hour target or a daily target. At that point, you're compounding wealth. You might as well be an investor at that point. But obviously, pay yourself, pay the trader. Again, guys, don't be greedy, because at a certain point the price will reverse. So just understand that. Understand the price will reverse, and then obviously, what it's gonna do? Take out what's created right here, internal range liquidity. Okay, maybe sell stops are right there. I don't know. It's really nothing for price to say, like it's really nothing, and it definitely will. So again, use risk management. Obviously, pay attention to how you actually feel inside, and invest in proper knowledge. Honestly, if you don't do anything and you're in this industry, invest somewhere into a mentor. I'm actually looking to take on a few mentees if people are serious or are wanting to learn, right, and are wanting to trust the process, and are wanting to eventually move to a live account, and then eventually start making actual money and start paying bills, pay some tax, take care of the family. But we all, I guess, I don't want to say want to do, right? Because in order to want something, you obviously have to put in the work, put in the intention, or make the intention. We all desire wealth. We all desire money. We all desire finances. We are high finances, but not a lot of us are willing to put in the work, and that's the problem. And again, as long as markets are bullish, as long as the trend is going up, the trend is your friend. So even if you ever like wanted to keep going, and you can definitely stack, whether that be counter trend, pro trend, as long as highs are being maintained, as well as you're looking out for traps, you can keep stacking. Obviously, it's going to be sacrificial over the long run. So again, pay yourself, and obviously be smart, right? Understand where the traps are. And if you want me to go over that, I could definitely make a video on understanding smart money traps, understanding sell stop, buy stop traps, understanding power of three, accumulation, manipulation, distribution. Leave a like, share this video. This video is definitely long enough.